Good morning. You're watching Daybreak on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian stocks search for direction as the first wave of tariffs loom. China vows it will not fire the first shot in the trade battle with the US. SEBI issues a second show-cause notice to the NSE in the co-location case. And Reliance Industries will hold its 41st annual general meeting today. On to the big news now. China has said that it wouldn't implement higher tariffs ahead of the US on Friday. And separately, German auto industry leaders are making the case to the Trump administration that a trade feud with the US will cause irreparable damage to global business. And essentially, that's what a lot of businesses are talking about. Sarah McGregor of Bloomberg News reports.
So in some ways, it would have been surprising, actually, if China had put tariffs into place before the U.S. Of course, the U.S. instigated this whole issue. They did this 301 investigation and found that China was violating intellectual property rights. And this is where these tariffs came about. It was never China's desire to put tariffs in place in the first place against U.S. goods.
Right.
We don't have a breakdown yet of when exactly the U.S. tariffs will go into effect. We don't know if that's been communicated even to China yet. And I think really what happened is that there was a difference with the time difference with China being 12 hours ahead. There might have been some confusion.
All right, now, German auto industry leaders are making the case right now to the Trump administration that a trade feud with the U.S. will cause irreparable damage to global business. Who are we hearing from?
So today we've heard actually that some German automakers met with the U.S. Ambassador to Germany. And I think basically what they're trying to do is find a way to avert auto tariffs. The U.S. right now is investigating whether auto imports pose a national security risk. That was the same grounds that they used to impose the steel and aluminum tariffs, which also hit Europe. And I think the feeling is that auto tariffs could have a much deeper impact on the economy and some of these companies. And I think there's some scrambling going on now to see if Europe or even within the automakers themselves, they can sort of cast some influence with the U.S. administration and try and avert tariffs with a different type of deal.
Sarah, we know that U.S. automakers have pleaded their case as well repeatedly. Is the president listening?
We don't have an indication yet of where this investigation is going. We heard from Trump last week that it may take 3 or 4 more weeks before he perhaps receives the recommendations from the Commerce Department, which will determine whether they do auto imports do pose a national security risk, and if so, it may outline a list of recommendations of action that Trump could take. After which, the ball would totally be in President Trump's court on what to do. Although this investigation under law, this could drag out into early February. So a lot depends, of course, on the midterms here coming up in November, how Trump might want to play this politically. And I think, there's some breathing room here for these countries to try and make their case. So, we're going to have to see. Often Trump will give us an update at a press conference or if the question's thrown at him. So we'll have to see what he says the next time he's asked about it.
No news from the U.S. markets, of course, because the markets were shut yesterday on account of a national holiday. But we do have updates on the Asian markets this morning. I'm joined by Bloomberg's Juliet Sally, who joins us live from the Singapore studio. Morning, Juliet. Just perhaps a little too early to find out which direction China is heading, because it's just opened up. Perhaps you can give us a sense as to which way the wind's blowing in Asia.
Well, the wind is blowing a little bit mixed. Of course, as you say, not a lot of direction. We had those US equity and bond markets closed for Independence Day. We did see Treasuries resume trade. Small declines there. The dollar little changed. Now, the yen is steady at 110.46. We are seeing Japanese stocks, though, coming under pressure, along with further pain in the tech space. So that's hurting Taiwan's TAIEX. But to the upside, you're seeing those commodity markets, the likes of Australia and New Zealand, doing well. Now, we are kicking things off in China right now, and I'm seeing the Shanghai Composite just slightly higher, up by about 1/10%. Hong Kong, though, is weaker by around 0.2%. Of course, a lot of attention on these markets, again, amid some signs that some stability is returning to the yuan after its sharpest decline since we saw policymakers devalue the currency in 2015. Today, the PBOC has strengthened the fixing by 0.62% to 6.6180 to the dollar. Now, that is actually the strongest fix since October. In some corporate news, we've seen China Southern and Air H shares raised to buy at UOB. And then, of course, we've been following HNA Group, the Chinese conglomerate that's been selling billions of dollars in assets worldwide to pay down its debt. We understand it intends to use a lavish residence on Hong Kong's Victoria Peak as collateral for a loan. This is according to the South China Morning Post. And this news comes after the company's number 2 executive died while on holiday in France. Analysts telling us that his death will bring short-term shocks to business development for HNA, but the long-term impact will be limited. But overall, seeing a little bit of mixed movement coming through in these Asian markets this Thursday. Back to you.
Thank you so much for that, Juliet. Turning now to the Indian market, Agam Vakil is here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Agam, perhaps, like Juliet was saying, mixed cues coming in from Asia. We don't have any cues from the US, but one key element to look forward to is the Reliance AGM today.
Absolutely. You know, Alex, over the last couple of days, we saw the SGX Nifty indicate a negative opening. That's exactly what we saw. And ultimately, we saw the indices close in the green. So I wonder if it's going to be the case today as well. As you can see, the SGX Nifty is indicating a negative opening going today. How did our indices end up yesterday? Well, as you can see, about 0.5% increase on the Nifty and some gains coming through in the broader markets too. So the mid-cap and the small-cap indices did also close up. And when it comes to the Nifty Bank and the Nifty Metal indices, we'll talk about that in a bit. But the Nifty Metal, Realty and Auto indices also will gain traction. In fact, the Auto Index stood out here. Now, coming down to your month-to-date performance, Nifty Pharma advancing by around 2.5%, 2% gains for the Auto Index too. And on the losing end, we have some weakness overall in the infra, metal and realty space, though the gains that we saw yesterday did come and counter this weakness going in. Now, let's take a look at the FIIs. And, you know, the gross numbers were very small yesterday. And that's the reason why you aren't looking at too much traction when it comes to the FII or DII, selling and buying, respectively, in both cases, which means that the numbers on a year-to-date basis will not differ to a very wide margin either. Let's move in and take a look at the contributors. And as you can see, HDFC and HDFC Bank, along with Reliance Industries, the 3 heavyweights, actually pulled the indices upwards, and Infosys and ITC along with TCS did bear down on the indices. What else do we have in terms of the markets and the kind of traction we saw? Fresh longs coming through as well, about 4% increase in open interest. And when it comes to the Nifty Bank futures, again, longs coming through. So it has been a good day of trade, at least as per yesterday. This picture hasn't really changed when it comes to the open interest distribution across the various strikes. So we continue to see open interest in the 10,600 put and the 11,000 call, which gives you a rough range as to where you can expect the Nifty to move within the near term. But when it comes to changes in open interest, there was substantial traction out here in the 10,700 mark. 10,700 put starting to see more writing, along with the 10,800 put as well, and not too much to speak for. Perhaps some writing in the 11,300 call, but that's clearly a case of, well, eating the premiums. And let's take a look at the put call ratio. Then that edged up higher too at around 1.53 for the Nifty, and for the Nifty put call ratio too, it's substantially higher now, well above the mark of 1. In fact, at 1.18 to be precise. In terms of stocks, we're watching for Apollo Hospitals, longs there. Longs also seen in something like Repco Home Finance, and we're also seeing a lot of traction in Shriram Transport Finance, of course on the losing end, however, with a 55% increase in open interest, even as the stock tumbles and takes a hit of 12%. Is there more weakness in store for Shriram Transport? We're going to have to wait and watch, Alex, because that was the biggest mid-cap loser in yesterday's day of trade.
All right, thanks so much for that, Agam. We're going to check now on the rupee and the bond market. Saloni Dhanuka is here with all the updates there. Saloni, you know, the rupee currency clearly taking a bit of a stumble yesterday post the announcement of the MSP hike.
Absolutely, Alex. So after a strong recovery that we have seen on Tuesday in Indian rupee, it reversed most of its gains yesterday and ended 17 paise lower at 68.74 levels against the dollar. Now, rising crude oil prices along with inflationary concerns after MSP hike for Kharif crops by the government largely weighed on the rupee yesterday. Well, speaking of the bond market, sovereign bonds gained in trade for the second consecutive day yesterday. after yield on the 10-year benchmark bond dropped nearly 3 basis points to end at 7.85%. Now, in terms of flows into debt market, global funds increased their rupee debt holdings for the 7th consecutive session yesterday. That's according to NSDL data. Well, on the global front, with US markets shut yesterday, investors were turning their attention to US Fed meeting minutes, which is scheduled to release today. Now, traders are factoring 2 more rate hikes by Fed in this calendar year. That apart, Euro climbed on speculations that the European Central Bank will not wait until end of 2019 to raise their interest rates. So this helped Euro to gain in trade against the dollar yesterday, wherein British pound also climbed against the dollar yesterday after the economy posted better than expected services PMI data yesterday. And lastly, speaking of dollar rupee now, it is trading marginally weaker at 68.80 levels against the dollar in the non-deliverable forward markets, which indicates a flat to negative opening for Indian rupee in today's trade, Alex.
All right, thanks so much for that, Saloni. Now, shifting focus to the commodity space, you've probably seen over the past couple of years several tweets by Donald Trump that have been quite angry, so nothing out of the ordinary. These ones that just came out are quite interesting, though. But Jayesh Kilani is going to tell you all about those. Jayesh, we're talking about crude in the morning, we're talking about Donald Trump at the same time.
That's right, Alex. No surprises here, even though the market was closed yesterday on account of Independence Day, but that didn't stop Donald Trump from angrily tweeting to the OPEC members. And I quote, OPEC is doing little help to reduce gasoline costs. That is what Trump tweeted, and there's more to that as well. But as far as the prices are concerned, yesterday we had no queues on account of the holiday. But if you look at it today morning, it's trading about 0.5% lower and slipped below the 75 mark for WTI. As far as the inventory data is concerned, the US inventories are said to have declined nearly 4.5 million barrels for last week. So that's as far as the oil markets are concerned. But shifting focus to the base metal space, the index itself on LME declined for the 5th straight day. All the base metals except for aluminium ended lower. Now, aluminium snapped its 4-day losing streak and ended about 0.4 in the green. Copper ended lower for the 3rd straight day, and zinc, in fact, which was the top loser, contributed more than 3% to the downside, and we are now looking at a 52-week low as far as the zinc prices are concerned. Nickel also ended lower, and in fact it has done so all days this week. Now, if you look at the Shanghai Futures Exchange, understandably the screen is red, where Shanghai Copper is trading lower for the 5th straight day, cut of more than 2% seen for that one, and zinc is trading down nearly 5% for this entire week. But lastly, as far as gold prices are concerned, we have seen some bit of uptake in the last couple of days. Gold is now inching towards the 1260 mark on account of the dollar index, which did decline for the 2nd straight day.
All right, thanks so much for that, Jayesh. Now, moving to the big news from back home, the government on Wednesday kept its promise in providing a substantial increase in the minimum support prices, or MSP, for the tariff crop this year. Prices were hiked anywhere between 13% and 40% for various crops. Ira Dugal gives you the key talking points and also the likely impact this move will have on the economy.
The MSPs for the Kharif season were eagerly awaited. A bunch of reasons for that. One, there's all this talk about agrarian distress, so these MSPs were coming against that backdrop. Two, everyone is trying to gauge whether the government is turning a little bit more populist going into an election year. And three, we're also at the turn of an inflation cycle. For all of those reasons, the MSPs are important. What did you get? Well, you got a much higher than expected hike that you have seen in the last 3 years. So some of the key crops, paddy, about a 13% increase, jawar, bajra, cotton, all very sharp increases. If you look at some of the pulses, the trend was slightly different. Pulses where there's been a bit of a glut of supply in some cases. The increases were lower. Tur at about 4.3% year-on-year increase. Urad 3.7%, but moong quite a steep increase of about 25%. On a weighted average basis, according to CRISIL, the increase in MSPs in the Kharif season is 13%, and that increase is steeper than what you have seen over the last 3 years for sure. In terms of how these MSPs have been computed, there was a lot of debate after the budget said that they would insist or ensure that 50% over and above cost is given to farmers. Well, that cost is being computed based on the family labor. So that is the cost, and over and above that, they're ensuring at least 50%. In some cases, actually, it's as high as 90% over and above that A2 plus FL cost. But the other sort of concern was that perhaps you could move to C2 cost, which is an even higher estimate of cost than A2 plus FL. That includes land costs, capital costs, etc. There was some concern that you may move to that particular formula, but that the government has decided to. For the farm sector, some of that was already being seen in green shoots in the rural economy. So this will perhaps only add to that, and perhaps it can help balance out the concerns that had emerged on the agrarian distress front, while, of course, exacerbating some of the inflation pressures which have already started to pick up. But maybe that balancing act had to be done because you couldn't be in an economy where one segment, an important segment of the economy, which is the agricultural sector, saw a fair amount of distress based on everything we've been hearing.
And sticking with this issue, former Agricultural Secretary Siraj Hussain welcomed the government's decision to hike MSPs of Kharif crops. But in a conversation with Ira Dugal, Hussain cautioned that MSP hikes do not always translate into an increase in market prices. He also said that the hike will benefit farmers of crops where procurement is undertaken. This was also highlighted by D.K. Joshi, who's chief economist at CRISIL, who said that the MSP hike is going to have a mild inflationary impact, which could vary based on procurement. Here's a portion of those conversations just to put things in context.
I think as we saw in the press release of the government, the MSPs have been increased by something like up to 97%, 50 to 97% is the increase over the A2FL. And now I think if you compare it with the MSP of last Kharif, then it works out to be 4 to 52%. And 52% I think is in ragi, and in some of the pulses I think it's at the lower end of around 4%. So I think it varies across crops. Now I think the critical issue is what is it going to cost the government, number one, which is a little difficult to work out at this juncture because it will depend on how much government procures. But we did a simple calculation as to if government were to procure the same amount as last year, just the increase in prices, in minimum support prices, would lead to an additional expenditure of about 11,500 crores. And the actual cost is going to be upwards of that because government is definitely going to procure more than it did last year using a combination of methods. So clearly, I think that's on the fiscal side, and on the inflation side, I think our assessment currently is that it is going to have a mild inflationary impact. Actually, it depends on how effective the procurement is. The more the government is able to procure and keep the prices up, the more its impact on inflation is going to be. And if indeed I think the output gap is closing, as RBI pointed out, then I think then this step can be mildly inflationary for overall generalized inflation, from overall generalized inflation perspective as well.
Mr. Siraj Hussain, there will be a tendency to say that this is inflationary, and yes, of course, it will be inflationary. But I think at this juncture, when we've had 12, 18 months of, instances of farm distress emerging from various parts of the country, perhaps there is some justification to the government reversing its last 3 years policy of very moderate MSP increases, sir.
Yes, I think it is a good decision of the government, and we cannot fault the government now on the ground that it will cause inflation, because it was known that over a period of time there may be some impact on inflation. However, I would like to clarify that it is not necessary and it is not automatic that increase in MSP passes to the increase in market prices. We have seen in the last 2 years especially that the MSPs of pulses were raised very substantially, and yet the market prices remained much lower than the MSP. In case of groundnut also, we have seen even in Gujarat itself that the market price is about 1,000 rupees lower than the MSP of groundnut. So this passing on of higher MSP to the market rates is not automatic, and we do not know how much time it will take for the market to rise in sympathy with the MSP. However, in the longer run, there may be, of course, inflationary impact. However, for the time being, we can say that the farmers of those states where the procurement machinery is robust and of those commodities where procurement is actually undertaken, rice and paddy and cotton, for example, these farmers will benefit. So we can say that the farmers of Punjab, Haryana, Andhra Pradesh, Chhattisgarh, Western UP, Odisha will benefit, the paddy farmers, and the cotton farmers of Maharashtra, the cotton farmers of Gujarat may benefit if the Cotton Corporation of India undertakes the procurement of cotton. So for the time being, I think it is a good decision, provided, and that is yet to be seen, how the government actually helps the farmers of those crops which are not procured by the government. So for example, the farmers of maize in Bihar, we have seen that even last year, the farmers in Bihar were sold their maize at about 200 to 300 rupees less than MSP. How are they going to benefit from this? Or the paddy farmers of Northeast. There is no procurement of paddy in Northeast, entire Northeast. So how are they going to benefit? These are the details which are yet to be seen, yet to be released by the government.
Very key concerns being raised in that conversation. Of course, the entire conversation is available on the website bloombergquint.com, so you can look at it when you have the time. But for now, let's turn to Shraddha Babla, who joins us with the stocks in news that you have to watch out for today. Morning, Shraddha. What do you have for us today?
Good morning, Alex. It's GM Breweries which will kick off the Q1 FY19 earnings season. It reports numbers today, so that's one stock to watch out for. Negative development for Titan, which has shared its quarterly update. They've said that the jewelry business is likely to post a muted growth in the June-ended quarter. In fact, CLSA also has said that they've heard this kind of a negative commentary after many quarters, so you could see some negative reaction there. You have Biocon, whose sterile drug product facility has received the EU GMP certification. Force Motors has reported total sales for the month of June. They're up 8.2%. Intellect Design Arena has signed a pact with Banco Santander for implementation of a digital transaction banking system. You have FAM Industries, the auto component maker. They've entered into a technical collaboration with Japanese companies to manufacture certain parts for motorcycles, and that is predominantly for the Indian market, so you could see some positive reaction there. Future Lifestyle has said that they will acquire up to 29.9% stake in e-commerce player Coos, and for that they will shell out a total of 140 crores. Right now, they will subscribe to equity shares worth about 51 crores and then increase their stake later. You have Som Distilleries and Breweries. They've acquired a brewery in Odisha for 46 crores. You have Religare, which has filed a plea under IBC against Bharat Road Network. They've claimed a default of 51 crores, so watch out for Bharat Road Network. CMAC has entered into a contract with ONGC for charter hire of a vessel. The deal is valued at $22 million. Again, some positive reaction there, as is for Nath Biogenes India, where the promoters have released the pledge on shares that were held by Asset Reconstruction Company after clearing all the outstanding loans. And finally, India Bulls Ventures, we did see a block deal in trade yesterday. So Cinnamon Capital has sold 2.7% stake. That's a stake worth 650 crores. The buyer was Jasmine Capital Investments, PTE. So those are lots of stocks to watch out for, Alex.
All right, thanks so much for that, Shraddha. Now, before we go forward to the last point that we have to discuss today, I do want to point out that we have a special show on Bloomberg Quint called Portfolio, and we're dealing with personal finance on this show. Both Shraddha and I take care of it, so you can reach out to us if you're interested with help on anything that you have with regard to your plans. You can say that you want to buy a house in 5 years, or you can say that you want to plan post getting married. It can be anything under the sun, and there are no restrictions with regard to your current income levels. So do write into us. You can also reach out to me on the Twitter handle that I mentioned in the comments below. Moving on now to the stories that you can find on the website bloombergquint.com as of now. First up, PTI has reported, quoting sources, that the RBI has issued a license to the Bank of China to launch operations in India. And a round of succession planning is imminent at Housing Development Finance Corporation, or HDFC, and its group companies. That's according to non-executive chairman Deepak Parekh, who said this in a letter addressing the shareholders of, obviously, India's largest mortgage lender. All right, that's a wrap on this edition of Daybreak, but all you need to know is up next, so do stay tuned. Thanks for watching. This is Bloomberg Quint.